Welcome, members and guests. I'm Hanny Michael, president of the Better Investing Online Club, and we're a Better Investing club. All our meetings are are virtual, and allowing us to have members from the U.S., around the world, including Canada and China. We have two guests today, and guests, you'll be observers for most of the meeting. You'll be muted, and you'll have an opportunity at the end to ask questions and provide comments on, give us your thoughts on how the meeting went. So any companies that we're going to be discussing today are for educational purposes only, are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own research and analysis and make your own investment decision. Also, this meeting may mention products, services, other websites that are not endorsed by Better Investing or this club. And the views expressed are those of our members and don't necessarily represent those of Better Investing. This meeting is going to be recorded and posted on our YouTube channel for future use. Joanne, are you going to record?
We'll discuss that after the meeting. Can we discuss that after the meeting? Okay.
Absolutely.
It is being recorded according to my message.
Okay.
But I don't know if it comes onto my desktop is the issue. So, but we'll talk about it.
All right. So this is our agenda for today. We just had the introduction. Roy is going to do the treasurer's report. We're going to skip this next item, new name discussion. We'll discuss that offline. We'll talk about stock watcher reorganization. We don't have an education topic this month, but we will have one in November. And we have 3 stock studies today. Megumi, Mina, and Roy will be presenting restaurant industry, residential construction, and renewable energy. And John, I don't think you're presenting Schwab because they have not, the data has not been updated in SSG. Is that correct?
That's correct.
Okay. November, we have a pretty busy month. We're going to have a number of quarterly reports, and then we'll be ending with some discussion and voting on possible buy and sell. Does anyone want to add anything to the agenda? No? Okay. I'll hand it over to Roy then for the treasurer's report. Roy, are you?
Yeah, I don't see it invited, but let me clear off.
I will make you presenter.
There it is.
Yep.
Okay. Let me move that over. And let's see. Okay, this is tonight's treasurer's report. There, that should have, there we go. Recently we sold some stocks. I thought we sold 3, so I may have messed up on one of Biogen, but maybe we sold 4. I'm not. Anyway, that's how much we got. And this is the portfolio that we've had using Morningstar. And you can see that at the beginning we did quite well, and then recently we've had some losses. And that could be either that, you know, that we weren't as careful as we should be when we bought, that the market has been going goofy at times and we got caught up in the goof, or it just shows that buy and hold actually works, and because our older stocks have done quite well. And we also use the My iClub for our portfolio, and that's through iClub Central. And this is our present holdings. I don't know if I can make that any larger, but when you can see that we have, with $1,000 I deposited today, almost $11,000 in cash, which is great if you want to keep your powder dry, but we want to be as fully invested as possible. And so that's why later we'll be presenting 3 stocks. Normally we would present one stock in a stock study, but because there's so much, we decided to each individually pick our own industries and try to pick the best of that industry. Kind of an abnormal thing, but holding that much in cash is pretty abnormal too. Here is the breakout of our stocks. We want to have small stocks, which we don't have any. We want to have some large stocks, which we do, except these are mega size. There's a whole lot of stocks that are smaller than that in the large category. And this is the way it looks. We have just over half, 50% in mid size, which is what BI recommends. They also then recommend 25% large and 25% small. We have pretty much the 25% large, but in mega. And then instead of small size stocks, we have cash. And here is the breakdown into sectors and industries. And then Morningstar has come out with these super sectors, which sensitive or cyclical or defensive, and they probably should be much more balanced than that. And then the sectors, you can see we're heavy in technology. Consumer cyclical is kind of large, and then industrials, communication services, real estate, and financial services are much smaller, although communication services and industrials are probably a pretty good size. And here it is broken down by industries and then the companies themselves. I just wanted to explain, because we've had questions in the past, and I obviously can't spell contributions, but how I come up with $1,000 that I deposit, I just, when 4 of us were in the club, it was easy. It was $250 each. And then when we went to 5, it was $200. It's a little more complicated with as many people as we do. So I just pick and throw in $100 into an account for these people. I'm not listed, and I didn't put in one other person. Matt's not listed, but everyone else got $1,000.
Why can't you just put in 1,000 for one person?
In this, you can't. Well, I could, but then every month, you would then have to change it. This puts it, sort of looks like a real club this way, where it's split out, where everybody would put in $100, which is what you'd have to do as treasurer, is show this. I'm trying to show it as if we were a real club. That's why. I mean, it would be, $85 or something for each of us if I were to do it that way. I just didn't want to go through that sort of machinations. So anyway, that's the treasurer's report. Any questions? We just got a lot of cash we need to get rid of.
Okay, thanks very much, Roy. If there's
Let me send it back to who?
You can send it back to me for a second. I'll just show the agenda again.
There you go.
Okay, so can you guys see my screen? I can see Bernard.
Yes. See Bernard's
Uh,
head.
Take your
Yes.
video
Oh, yeah,
off.
you don't need to use the video, Bernard. Yeah, there you go.
So we have a stock study this month. We'll maybe I think we'll skip over this stock watcher reorganization until the end maybe, and that way we can get into the stock study, which is a bit more important, and then we'll figure out who's doing what later.
And if we buy new stocks, we'll need somebody to watch them. So that makes sense.
Exactly. Thanks, Tom.
Yeah.
Okay, so this month we have, as Roy mentioned, we have 3 separate stock studies in 3 different industries because we have a lot of cash, and we need to deploy that capital. So we'll start with Roy. Do you want to start with the restaurant industry?
I was going to just start by explaining why we're doing it this way, but I think I did that in the treasurer's report. So, Mina, are you ready? Do you want to go ahead and present yours first? And then Megumi will do hers, and then I'll do the wrap up.
Actually, sorry, do you mind if I go second? I'm just running a little behind and I'm just setting up first. So, would you mind,
Okay, Megumi, would you like to go now?
I can try. Oh, go ahead. Can you hear me okay?
Yes.
I want to ask a favor, Roy. What about if you could send that treasurer's report, say, on email? I don't know if it's not difficult, because I'd like to look at it in more detail.
I'll send it to everyone.
Okay, fabulous. Thank you. Thank you. Okay.
You can also, Roy, you can just put it in the there's a drive.
I'll post it in our Google Drive.
Yep. Okay. And I'll make you a presenter, Roy. So.
No, make Megumi.
Oh, sorry, Megumi. I'm sorry. Yep.
So what do I do? Do I go over the
Oops.
do I go over the form? Is that how I do this?
Yeah, I would use your first cut and then bring on the SSG and anything else you want to show us.
Okay. Hold on.
Can we see your screen? Yep. Okay.
Okay, can you hear me?
Yes.
Yes.
Okay, so the industry that I had, is residential construction, and the sector is consumer cyclical. I don't work in the residential construction industry, but I am an architect, and I can say that the construction industry is inherently volatile. But given the current economic conditions, the interest rate, employment rate, and inflation rate are all favorable right now. And as long as our population continues to grow, we're always going to need homes, especially at the entry level. And as Roy mentioned at the beginning of the meeting, we do need to spend some money. So I looked into as many residential building companies as I could. I'm sure I didn't cover them all, and try to come up with one that had the best numbers. Figuring if we buy it at a good price, we can, as it goes up and down, we can hang on to it and hopefully sell it at a decent price later on. So the company I studied, ticker symbol is CCS, and they're called Century Communities. They were founded in 2002, and they're a medium-sized construction builder based in Colorado. I try to find something that was small because I know our portfolio is very short on small-sized companies, but I just wasn't able to. So CCS, they develop, design, construct, market, and sell single-family homes in roughly 14 states in the US, and 75% of their sales are for entry-level buyers. They sell single-family homes through their own sales rep, as well as independent real estate brokers, and they also advertise directly to home buyers. They also have a financial services segment that provides mortgage, title, and insurance services to home buyers. So the closing stock price today was $32.73. Moving down the form. So why do I consider this to be a high quality growth company? The graph looks pretty good, except for the last 2 quarters. Should I bring that up, or let's see.
Like to see it.
You can? So I know these 2 quarters look bad, but I think there's an explanation, but I'll keep going down my form. So since going public, the revenue has increased every quarter since June 2014. So the earnings did take a dip in 2017, but that was also the year that they paid their highest taxes. Their ROI is trending upwards. The debt to capital for the industry looks like about 40%. So, and their 5-year average is 49%. So I don't think that's something to be too concerned about.
Well, and Megumi, that industry in general carries a lot of debt, because especially if they have mortgages, if they're giving out mortgages, they'll have debt on their books, but they usually build homes and then they have to sell them. So it's I think that's probably normal.
Okay, great. So the explanation for the bad last 2 quarters, I think, might be the uptick in the interest rate in the latter part of 2018. But like I said, otherwise the graph looks pretty good, has a nice form. Other reasons are MarketWatch, NASDAQ, Yahoo all recommended a buy. Zacks recommended a hold. The value line indicated that this industry fares well when the Federal Reserve is supportive. And from everything I read, that the metrics will likely just get stronger in the upcoming months or become more favorable. Let's see, other reasons. They are rated as a top 10 publicly traded residential builder in the US, and they were the fastest growing public home builder 2 years in a row by Builder Magazine. Okay, so I guess I move on to my SSG now.
Well, either that or address your growth rates and then why you pick those, and then bring up the chart.
Okay, so for a long time there wasn't any analysts rate, the analysts' consensus for the sales growth. So I had a high number in there because, like I said, they've grown tremendously since going public in 2014. But then when the numbers for the analysts did come out, it was like 10.8. So I chose 12%, just being optimistic with all the other indicators that I've read about. And let's see. So that's why I selected this rate. What's going to drive sales growth is the sale of new homes, and there doesn't seem to be any indication that's going to slow down for the next while. Future growth will come from they buy land, develop it, build homes, and sell it. That's how they make money. So then the projected growth rate for earnings per share, 24%. I just use the preferred procedure number and round it to the nearest whole number.
Megumi,
Yeah.
correct me if I'm wrong, but if I recall our discussion, this company focuses more on sort of entry-level homes.
Yeah, they said 75% of their sales are for entry-level buyers.
And that's something that I've heard on CNBC and on Nightly Business Report, that it's the more expensive homes have had a slight, ever so slight fall off, but the growth is in the new homes, because millennials who the theory was they weren't going to be buying homes, they just wanted lofts and that, turned out to be false as usual. Experts are wrong, and they're buying now homes, but they need the entry-level homes. So that was another reason we thought this could be a little bit optimistic on this. They seem to be in the right niche.
Oh, Megumi, can you show the stock selection guide?
Yeah. Let's see. You're talking about this, right?
Yeah, can you make it bigger?
Make it bigger. My screen is as big as it can get.
You just do Control Plus to see.
Oh, okay, hold on.
Yeah, make it bigger.
Oh, there we go. Bigger?
Well, I can
go bigger.
I can see it, I guess, but it's, let me try
Well, she
zoom in
posted
here.
it on the Google Drive, so
Okay.
recommendation is always to, make a copy or at least bring it up.
Okay, yeah, I can see that now. Okay. So where did you start your projection for the
Oops.
sales growth?
So here, the analyst 2-year estimate was 10.8, and I chose 12 because I think it's okay to be optimistic.
Okay, and I'm just wondering where, I guess I said the wrong thing. Where did you start the projection for the earnings growth? Because you had quite a drop.
So the preferred procedure, I started here, but then I just round it to the.
Where does the projection start? Are you going from last quarter? Are you going from trend?
Oh yeah,
You're going from annual?
A quarter, hold on. Quarter. Is that what you mean? Yeah.
Okay. Well, I'm just, well, okay, I guess that's how that works out. But, I'm just wondering if maybe we should start the projection at a little bit higher point if you don't think this last quarter is reflective. And also it's just, I think it's insane to expect them to grow earnings twice as fast as sales.
Well, one of the things, and I don't know if that applied to the sales or, cost of goods area, but interest rates were higher at the end of last year and in the beginning of this year. And now that they've dropped the interest rates twice this year, the expectation is this is going to take off. But
yeah, but you can
in this
see
type of business, maybe the taking it from the trend. I'm a little hesitant myself to use the annual, but because of this is a kind of a cyclical industry, the recommendation is sometimes to use the trend, and that would have allowed a lower growth rate for earnings. But
yeah, a couple of comments, I guess, just along what Tom is saying. If you can go back to the graph there, Megumi, just for a second. So if you look at 2014, the red and blue line are pretty close to the green line. The difference between those two lines is the cost. Is their cost of goods or what have you. And then as time goes on, the two lines are diverging. So there's more there's more space between them, and what that says is that their costs are going up and their efficiency is going down. So they're making sort of less return,
Mhm.
or less profit rather, which you can see from the percent pre-tax profit on sales at the bottom. So they were at like 10, and then they're it's down to 8.5, 8.2, 7, 5.9, and then 6. So on the one hand, if they're increasing sales, maybe they're buying in bulk, they're buying wood and other building materials in bulk, that reduces their cost, but it's also just more complicated to try to sort of build more and more and keep your cost structure down. So I agree with Tom. I think like 24% is pretty aggressive. I also think 12 is probably, like you said, optimistic. I don't know where the economy is going, but we might want to be a bit more conservative and just see what happens with the projections.
Another thing that as Tom mentioned, it brought me attention to the historical growth rate. For sales is a 52%. The earnings is half of that. So,
Right.
but for our cast is other way around. We think that the future will be double growth compared to sales, but historically it showed as half of it.
Yeah.
The earnings is
I
half of the sales.
I guess before I got this number, I had it at like 20. I had this at 20, and then this showed up, so I
So
bumped
if
it
you
down.
if you put that at 20, what that means is that
Mhm.
every year they're going to grow by 20%. So that's the annual. That's not over the 5 years. That's every
Right.
year that you're going to go by 20%, and that's really tough to do, I think, for any sort of business to maintain that level
Maintain.
of growth.
So what is this number, the 52.5?
That's basically that's the slope of a line that's taken through those green points. So they take the natural log of those numbers, and they do the best fit line through it, and it comes out as 52.
Okay.
But that's not maybe exactly what's happening with the company. But if you took each number, and then the difference between, say, 2014, 2015, worked out
Yeah.
that as a percentage, then the next one and the next one, and then average them out, you might get something different than 52%.
Haney,
Yes,
I
sir.
understand what you're saying, but when you look at 2014 at 360, and the 2018 is over 2,000, 4 times that, I think that's 52% is the annual average annual growth rate.
Yeah.
It's not just the slope.
That's how I interpreted it. So I thought
Well,
20 would be, yeah.
No, you can match it. It's not that it only grew 52% since then. It grew 52% per year on an average.
Yeah, but they get it through the slope. I think it's the best fit line
No,
through.
they look at these numbers and figure it out through the annual returns.
That's, I think, if you look at the calculation reference for the SSG, that's what I read before. If I'm correct, I can't remember, but I can pull it up. But regardless, I don't, it's I don't know if that's sustainable, that level of growth.
Well, that's what, she and I talked about it, and at the 50% growth rate, it seemed like 20, could be, but that seemed perhaps a bit optimistic, and so that's why she wanted to go down to slightly above the analyst 2-year estimate. I just, I probably talked her into going down because of that But
Another thing
it
is,
could support, what's going on with that industry and that particular company, I think could support higher number, but
Yeah,
I
and I
maybe
think
can't.
that's
not
what
to use
that,
the, another thing is that it may not make sense to use the preferred procedure in this case.
yeah. Let me put this back to 12. How come? Oh yeah. Why doesn't this go back to?
Well,
So it has
So
changed. Did you? It
why
changed
did
maybe.
yeah? Why did this go down?
Did you refresh the data today?
Not today. Yesterday.
Okay, that could be. I don't know. That's possible too.
Okay, I'm sorry I had to take a phone call here, and I'm back. Now I'm just wondering, this company, like how I think we should go more by the recent years. They're starting out at like such a low point that it's just, this growth rate I think is just kind of like nuts. When it goes from 96 to 2100, it's just
Well, that's why
um,
she cut out those first 2 years.
Well,
okay.
they didn't.
Okay.
What are you talking about? Where? Oh,
Yeah, well, I switched over to sorry, I switched over to my own SSG here because I can't really see the one that's on the webinar. So, okay, I'll cut out the first 2 years.
and
But
another
still,
negative is the 70% debt to
but still, we're
equity.
going from
And that's
362
a,
to 21, and that just isn't sustainable. Like it doubled from well, I guess it almost doubled from last year to this year, though. But
Yeah,
it's just
but that's why she only chose 12, not 50.
well, all right. But yeah, I still don't think we can get earnings growth as high as it was projected. But
Yeah,
okay, whatever.
I understand the logic that,
mm-hmm.
I understand the logic. I just think that's, I don't know. They're dipping. The last 2 quarters have dropped. I don't know if they,
Mm-hmm.
it just seems, I don't know if they can sustain that kind of EPS growth. But now
Well,
they're
I mean,
also they're
but they're
also
also. Yeah. Go ahead.
they're growing by acquisition, if I
Yeah,
understand correctly as well, right?
they purchased Wade Journey Homes in 2018, and that's solely for the entry level
Right.
buyer.
How much of their portfolio is entry level homes versus
75%.
75%? Okay.
Yeah. I don't know. I mean, it seems like a good buy. Sure, it's dipped, but and the projection for the economy is favorable. So yeah, I mean, I'm not as good as analyzing the numbers as all of you are, but I can tell you how I picked them.
Well, did you look at the earnings call transcript to see the explanation of the drop in pre-tax profit and earnings?
I did. It didn't really say. I don't recall if it said it out right there, but I did come up with what I thought was the reason. That's because the interest rates in the last couple quarters of 2018 went up, or and so a lot of and they did talk about a lot of the residential building companies were hit by that. That's why the first 2 quarters dropped.
And I forgot that you told me that they had bought that company. Acquisitions always, almost always reflect a higher sales but a lower earnings because of the cost of incorporating the new company. So I don't know if that explains part of it or not.
Okay, well,
So
what
what do
if
we do?
Megumi, what if, I mean, you haven't actually, you haven't finished
Yeah.
your presentation, so maybe we can
Well, let her finish the
Yeah,
SSG.
that's what I'm saying. Yep. Yep.
Go to the
Okay.
back.
So let's see. I don't know why this now is 17.3. Should I put 24 back in there? Maybe
I will say 17.3.
just
Oh,
stick with
I know
that.
why, because you changed the starting point.
Oh, okay. So should I? So I've never used trend before. Should I keep it there or
Yeah,
just go back to where?
go ahead and use it. See how it affects the SSG.
Okay, and then just use the preferred procedure. So keep
Yeah.
this at 17. Okay. Okay, next tab. Let's see what happens here. So I took the 5-year average high PE and rounded to the nearest whole number. That's how I got the 12. And then I did the same for the low PE. I took actually I took the 5-year average low, and to be conservative, I took it one whole number down. And that actually puts it at a hold. That did make a difference.
Yeah, as I told you, for the low, I usually use that 5-year average. It's the high that I adjust down. But
Okay.
again, that's me and some people I know.
Then it makes it a buy.
I feel like the high price is way too high. So today's price is 32. So you are saying is I'm always looking at if can give my personally, I always validate this as, if can double my money in next 5 years, which I'm looking at about $65. But this, I felt a bit more optimistic at high price.
Okay,
Why
so
don't you lower it to 10?
all right. So that puts it at a hold.
Well, it's going to, because the current PE is 13. So but I think maybe a different way to do this would be to go back to the first tab, and then just if you put I don't know, 9% sales growth. Let's see what, and then for your earnings per share, try preferred procedure, so 14. And I mean what's your average high is like 9, yeah. So it's
Average high is average
as
5-year
far as
average
10,
high
10 point, yeah.
10.
That's fine. Yeah, that's okay. What if it's it stays the same at 13?
She had a 12.
Or 12? Okay. So do 12. What does that give you?
2.6 to 1.
Yeah.
This one.
So you select the low price as low PE times. Okay.
Shouldn't this be lower than? Yeah, I don't know. It's already been at a 16. I don't know how this would matter, but
Lower than
Usually,
what?
the low this year is 1635, and selected forecast low price is higher than it's already.
If
So is
it's
this saying?
you use the calculation, it is the best choice. If that seems screwy, then you rely on the low prices and that. Just the fact that it dropped to 16.4, sometime in the last 52 weeks doesn't mean you necessarily use that.
Okay.
well, there's two trains of thought. So one, if we bought this stock today, and say, it's not unreasonable that within the next month or so it might drop, by 20%, and that would put it somewhere around $26.
Mhm.
But the other side of the coin is it's a cyclical industry, and so when you look at the 5-year average low price, or the price during the past 5 years, that
Mhm.
might be more meaningful if the industry is at a peak right now and it's going to cycle back down.
Mhm.
So if you
Mm.
just assume that we're saying that the economy is good, and then put 26 for the forecasted low price and see what happens, which is 20% from the current.
Oh, what, 26? Sorry.
Yeah, $26. Yeah, so update. So in other words, if we bought it today and in a month's time it dropped by 20%, which is it's not unreasonable.
Right.
It's a buy. But if this industry is going to cycle within, say, the next 5 years, if
Mhm.
you're expecting that the economy is going to go into recession at some point, then picking that 5-year low is not a bad guess either. So based on that 5-year low of what was it, 16 or 17? It's 5-year average. Where's the average price over 5 years?
Next box
Okay.
down.
Yeah. So, it's 16.
16.4.
Yeah.
The thing is, the building industry seems so dependent on the interest rates, and with the market, federal, what's it called? The federal markets, whatever, that committee wanting to continue to go down,
Federal
hopefully not
Reserve.
into negative territory, but it seems to support this type of an industry. So that was why we thought, of going higher than the low, 52-week low.
Hmm. Hmm.
Can I ask
Yeah.
another question? Would you know what the free cash flow is for this company?
I don't know. So that
2018 annual report.
Oh, was that also on the SSG on the right-hand side? Do they show cash flow? First tab.
can you
Cash,
get to the
free cash flow on
Oh yeah,
the legend.
free cash flow per share. Right. Yeah, you're right, Jay.
What color is it? Purple?
It's like
You
purple.
can
Maybe turn off
Megumi, you can
the other,
drag. Yeah, you can drag the line. You can drag these
or
purple, blue, drag them.
just
Yeah.
turn off the others, and then you can.
Oh,
So,
it's not on the chart.
there's no free cash flow
It's not on the
unless,
chart.
or
Hmm.
maybe can you scroll that chart up and down? Is there, maybe it's like really low.
Yeah, very low. Must be.
Yeah,
I
I'm
think you
scrolling.
have to grab a line to move the line. You can't move
Yeah.
the chart.
Go ahead and turn on sales prefect. Yeah, and then you can drag them. Yeah, move them up, move.
It's not letting me move it.
You can't pull up a chart that's not there. You have to pull
Mm.
the line that's visible to move that around. You can't create one.
But it's not letting me move this one.
Well, I think, or it could be this. There's no free cash flow.
Yeah.
Which
You
does
move
it
the
have?
middle part, the dots, all those. Yeah, drag. Go ahead. Try that. It didn't.
No.
Okay.
Oh, there we go.
There you go.
So maybe I should be.
Is free cash flow on the income statement or the balance sheet?
Income, I think. Incomes. Or
Okay.
sorry, no. On the
Jane knows. Is Jane at the meeting? On top of
the
her head, Jane?
2018.
Statutory income but adjusted for all the depreciation amortization. So it starts with the income, but it ends up with the cash flow. So it
I
So
think
starts with
they're very low. It's negative or something very low. That's why not showing.
Hmm.
What you can do is just a reset chart. You will come back. Megumi, did you see the reset? Yeah. Uh-huh. Yeah. You will come. Yeah, and it turn on. I think Tom probably
So
is checking.
so do you
Jane,
want me to go?
Jane, sorry. If their like their debt level is at averaging, 49%, and if they don't have any free cash flow, how do they I guess all their money is going to service their debt and their costs?
yeah, it's possible they have to service their loans, so they pay off all the interest. And also, even though they add in the depreciation amortization, require cash payment, so they add that into their income, but it still is not sufficient to cover all the interest payments.
I'm just trying a different company to see if.
Probably same thing.
Yeah, I'm looking here at the quarterly data, and it looks like the free cash flow or the annual data. Free cash flow has been negative every year since 2012.
Yeah, that's why it's not showing on the graph.
Right.
And the debt has in the last 5 years has gone from 229 million to $1 billion.
Hmm. Hey, Megumi, can I ask you, why do you decide to present CCS rather than other companies the competitors, the peers that you studied?
In the same industry?
Yeah, the same industry.
Well, I feel like it had the best numbers. I mean, I checked probably 10 different ones.
You mean best fundamental numbers?
Yeah. Yeah, I mean, a lot of them, the analysts were like negative projections, or the graph was just bad to begin with, or
The one you just showed, it doesn't look bad.
yeah,
The
it
other
does,
one.
yeah. LGIH, that was too high still. Let's see.
This
So I,
one,
so I, so I narrowed it down to LGIH, CCS, and NVR, but this was a hold, and NVR was also a hold.
can you reset the chart? I felt that this company, the graph looks a bit better than CCS. Oh, last 2 quarters also kind of slightly dip.
Mm-hmm.
And look, the gross earnings very close, and the trend is all going up. Return on equity.
But you guys are saying a 20% growth every year is unreasonable, right?
It's hard to.
But 5 has done that for a while. But maybe it's because it's a different industry. I don't know.
Yes.
Is a return on equity is a margin, right? Return on equity is a margin. This company had 21%, but other ones only like a 9% something, if I remember correctly.
Look at. Oops. Wait. Oh, here we go. Oh, here's a comparison guide. Let's see. Can you see this? Or
Very hard to read.
okay, let me bring it up on. So I'll just go here, and then is this better? Huh?
slightly better.
Hello?
Yeah.
Yeah, we're just looking at your numbers. LGI, the R square last 5 years is better.
I looked at this company briefly, and I mean there is a lot of positive things that people are saying about it. I think it might be more momentum than anything else, because like the fact that they have no free cash flow is a bit worrisome. But I mean the SSG looks fine, and depending on sort of whether you think the economy is going to continue or not, I think that's the tipping point for this.
Right. Which is the way I went.
Yeah.
But I can't disagree to make SSG at the 5.8 to 1 though.
I think, how did this happen? Let's see. Are these my numbers? The most recent numbers? Does this update as I update the graph? Or the numbers on the?
I think,
Yeah.
I'm not sure.
SSG, yes, reflect to your
Yeah.
SSG, because that was your current SSG, 5.8 to 1.
Okay.
Okay, do we want to maybe go to the next one and then we can come back,
Yeah.
or do you got, yeah?
Yeah, I don't.
So
Well, you
it's
see all the
really,
numbers.
it really depends on the assumptions, right? So
Yeah, it does.
if you know, again, if we think that the forecasted low price is you know, is going to maybe drop by 20% to $26, and the economy is going to stay the way it is, then it should be okay. If the economy, you know, cycles, then you're going to see the same sort of pattern that you saw 5 years ago, and that number will drop to the maybe the 16 or lower, depending
Sorry,
on.
Roy, I can't believe I put my finger up to you.
So.
Ina, are you ready?
Yes, I am. Yeah, so I can take over the screen here. Thanks for that. Sorry, I was just running a little late and had to vote this evening, so did
You're a
that.
lawyer. We understand you'll be busy.
It's no excuse, but I appreciate it. Thank you. So I accepted the screen. And I'm imagining those are showing up for everybody. Fine. Okay. So the industry that I looked at was renewable resources or renewable energy. Given that we were looking at small cap companies, I wanted to focus in on solar. So taking a look at some companies, I quickly identified Canadian Solar as probably the most interesting option for a purchase. I guess the reason why I looked at solar in the first place is that a lot of articles and a lot of projections are very bullish about the outlook of renewable energies and solar energy and the demand for that in emerging markets, in Asian markets, European and North American. So, you know, it just seems like an opportunity, a high growth opportunity. You can see from the price, I mean, it's an $18 stock. So, you know, there is room for growth with them, definitely. So Canadian Solar is one of the largest manufacturers and producers of solar panels. And what sets them apart from their competition is that they also develop solar projects, so larger projects to supply electricity in grids in various countries in Brazil, Mexico, and the US. What did I consider them? Why did I consider this to be a high quality company is that despite, so the last few quarters have showed decline. but that appears to be industry-wide as opposed to company-specific. So I don't think it speaks to the fundamentals of the company as opposed to general trends in the market when it comes to renewable energy. They blew out expectations from in terms of EPS growth, estimated to be 35 cents per share for the quarter. Well, they've nearly doubled that by beating projections by 42 cents a share. Now that pales in to some of the growth experienced by their competitors, and that's kind of why they've been left behind a little bit. Is that some of those companies posted, triple, quadruple EPS growth over projections. So it just seems to be they're more of a victim of a great industry as opposed to a bad company. Another thing that I found that sets them apart is that they posted significantly higher profit margins as opposed to their competitors. So quarterly profit margins for Canadian Solar 19.7% as opposed to 11.8 for JA Solar, 11.6 for Hanwha Q Cells, and 11.5 for Junco Solar Holdings. So significant, shows efficiency in the company, I think, and good management. The other thing is they appear to be an industry leader in terms of technology. So in September of this year, they announced a world record 22.80 conversion efficiency for certain categories of solar cells, and that breaks the previous record, which they set in April 2019. So they're constantly making more efficient panels for conversion to electricity, makes their product more in demand, and given kind of the global trend towards or a focus on climate change issues and a move away from fossil fuels. In terms of the numbers for the company, which so since 2013, I removed, so you'll see from the graph on the left side of the screen that there is a lot of volatility, it looks like, in the graph. And so I've taken out a few of the earlier years where they were really a startup and focus from 2013 onwards for an assessment of the company. And well, sales in that period grew 13.1%, and yet EPS correspondingly increased by 16.9%. Their debt to capital has been trending down since 2015. And in the last few years, they've started to show that upwards in parallel graph, save for the last 2 quarters of this year. So from 2016 on, they've really appeared to me a quite attractive company. And so the return on equity shows the volatility that this company has experienced. I mean, in some years it's 64%, other years it's 7%. So I think that might scare off some consideration. And I mean, I also just defer to the experts in terms of why if this is a good quality company. So MarketWatch, NASDAQ, Yahoo, Zacks, CNN Money all recommended buys for this company. Seeking Alpha had an article that really went into the fact that the market is volatile, or the industry is volatile, but future growth is really robust. Deloitte also put out an article, a paper on the prospects of renewable energy and solar panel companies moving from 2019 to 2023, and they find 3 main factors are really going to push growth. It's the emerging markets, and also what I found more interesting is that there's been a significant increase in voluntary demand of the product as opposed to demand driven by government policy or compulsion. So it seems like a lot more people and companies are actually buying into the product, or they find that it's worthwhile from them, given that the costs continue to decrease, the efficiency are increasing. So there seems to be there's soon to be maybe a turning point in the market in terms of it being a more attractive option, even from a dollar and cent perspective. But in addition to that, they found that, so Deloitte points to the fact that over the past 20 years, 50% of U.S. demand for solar panels is driven by policy. So especially California, Hawaii, states that are pushing to renewable goals, they've used solar panels to meet some of those goals. And so they're also very optimistic about the future, given that a lot of states have started to make even more ambitious commitments. So for example, Hawaii and California have made commitments to become reliant 100% on renewable energy within the next 30 years or so. So with that conversion, with that continued with the obsolescence of older technologies, hopefully then this can fill in that gap in the space. So that's why I thought it was a good company. Going to the numbers of what I put in, I used a projected sales growth rate of 12% for sales. This I really didn't. It's probably not a very logical way to do things, but analysts I've saw from Zacks and Yahoo and project around 14% for sales growth in that year, in the 3 to 5 year period. BI member sentiment is about 10, and the preferred procedure seems to show 5.6, but I don't think I did that properly, but so it dampened a little bit of those expectations. So I've taken it from the 14-15% range that I saw some experts predict or suggest and brought it to 12. And then for the earnings per share, I used a rate of 22%. I know that's high, but Zacks estimates for 3 to 5 years the EPS to be 31 or 32%, and Yahoo provides a 5-year growth estimate of 51%. That's countered by BI sentiment at 8-9%. So again, I picked a range somewhere in there. 22, I thought, reflects the estimates, or sorry, the analyst optimist, and then maybe it kind of dampens it a little bit. So we're continuing to use some sort of conservative approach to our investment. In terms of the high PE, yes, sir.
Mina, sorry,
Yep.
just a quick question. What percentage? You mentioned these guys sell or operate in Canada, United States, Mexico, somewhere else,
China.
Brazil or something.
China, Brazil, yeah.
How much of their sales are outside Canada versus in Canada?
I don't have the numbers, but I think it is a large majority are outside. I think the U.S. is the largest market for them at the moment, and then I think there's a lot of attention turned to China.
Because solar in Canada only works about 4 months of the year.
Mm-hmm.
Yeah, well, where do they manufacture? Is it China or?
I think they do. Pardon me. I think they do components in China.
Sorry, breaking up.
And then I'm not sure in terms of the final assembly of the actual. Oh, I think they definitely manufacture portions or some of the components in China, but I'm not sure in terms of all of them and where it's put together or assembled in the end. So,
okay,
I can definitely find out and email you about that. The headquarters is in Guelph, so it's actually just maybe an hour down the road from where we are right now, from Hanny and I. So that's where they're headquartered, but most of the operations are in the U.S. So let me just go back to, and then so back to the SSG in terms of the high PE. I used 13. The average high PE for the last 5 years was 13.2. So just rounded to the whole number. And the low PE I projected at 2.3. And so,
would you mind, Mina? Would you mind actually showing the SSG?
So I'm actually having problems accessing my the SSG software through my BI portal, and I don't know why. I've been trying on the phone with them for, I don't know, maybe 4 or 5 times. Everything is up to date and the account works, but for some reason I just can't access the software, and I don't have an answer to that yet.
I have it. I just imported yours.
Oh, perfect.
Let's see.
So if you wanted, would you like me to pass you the?
Sure. Let me open it. But I don't see projection. I just open yours. I don't see projection. We can have a look. Let's see. Are you making me? Oh.
Oh yeah. So whenever you're ready.
Let me make a. Okay. All right.
Oh, okay. Take it.
Yeah. So this is, I just imported, but I don't see. What's your forecast?
Oh, that's weird. The forecast I have for sales is 13.1.
And your earnings?
Oh, sorry, pardon me. For sales, I had 12%, and for earnings was 22.
Oh, 12%.
Yeah, that was just one of the estimates I found.
And Jay, do you want to change the starting point to quarter?
Okay.
Yeah.
Okay, 12%. And then what did you say, 24?
I said 22.
Oh.
So again, how do we expect earnings to grow twice as fast as sales?
Well, so it seems that continuously found more efficient products. So I'm hoping between the efficiency, lower prices, and the fact that they have higher margins than their competitors, that we're going to see, they have
So,
reduced costs, they're able to increase their margin that's already high, and if they can lower the cost of the overall project or the overall product, then I'm hoping just demand and volume will take that into consideration. But
so is that some rule, Tom, that you can't grow earnings twice as fast as sales in any industry?
Well, it's just, I mean, it just doesn't seem reasonable. I mean, your
You
margins would have to really increase to do that.
you can do it. You can do it for a short period of time. You can't do it over the long run.
Well, what's a short period of time?
Like a couple of years, 2 to 3 years.
So then how long do we, I mean, do we have some, so how long do we anticipate holding our stocks? 5 years, 10 years?
As Roy said, as long as it makes sense. But as we projecting forecast is
Hmm.
the 5 years forecast. Next
But
5 years.
Yeah.
yeah, and so the reason it's so high in this one is just that's I based that off like the analysts have it really high. I mean, Yahoo Finance projects the 5-year growth estimate at 51%. So I mean, and then Zacks has the EPS for 3 to 5 years at 32%. So that's why I
and
thought that was maybe a little bit more conservative compared to them. But
and looking at this graph, it doesn't appear that earnings have any relation to sales.
right,
No, not at all. Also, I can add a
Earn,
cash flow.
earnings are all over the place, and
Mhm.
sales
Yeah,
are relatively steady.
yeah, just everywhere. Um,
Well, that shows the green industry isn't always green.
Yeah, true.
Some of that is related to government policy.
Right.
So if you operate in jurisdictions where the government has incentives for solar projects or adopting solar panels or what have you, you'll see an uptick. And one of the reasons why you could potentially have earnings going double sales is because the efficiency of solar panels has been increasing quite significantly, and the cost has been dropping. And so the technologies is improving quite a bit, and the cost to make these things has been dropping. But
Yeah.
I don't know how long that's gonna last. So I think, like in Canada, for example, we had a period where the Liberal government had a lot of incentives for wind and solar projects, and maybe that's why they had a big uptick. And other jurisdictions are the same. And then when you get a change in government and they take away those incentives, their earnings drop because they don't do as much.
Yeah, Henry, I agree entirely. That's the one kind of con I raised,
Well,
was that we're so dependent on the government policy in
Uh,
terms of
I
directing.
was wondering,
Yeah.
especially after Haney was, said that, um, the sales are up, but the earnings and pre-tax profit fell, and then it went, sky high the last 2 years. Um, is it? Did they build some new plants in order to, make the new batteries and panels?
Yeah, so
Could that be part of the reason why the earnings went down?
well, that's a good question, and I think I wasn't able to find anything specifically on new plants, but their focus entirely was about their fact that they're breaking these records and all the
Yeah.
efficiencies, and so I think that there has been a big push by them to really invest in their own technology and really figure out the product. So I've attributed some of that just to R&D.
Yeah, and I know with my own portfolio, I'm real skitterish because of what goes on in Washington and between Washington and Beijing. But Canada won't have the same concerns. Now, of course, there was, I think last year or year before, a big concern about Canadian goods being sold in the United States. But after that new, I'll call it NAFTA 2, I can't ever keep up with the new names. I don't think there's going to be a problem bringing these panels into the United States.
Yeah.
So
Yeah,
that
there
was
doesn't seem too much concern
when
there.
Mina pitched this. You know,
Well,
the graph isn't the best, but there's some explanations for it, and it made me more comfortable with it.
I would be hard pressed, Roy, to name Canadian companies that are not owned by American firms.
Yeah.
So when they say that, you know, I mean, yeah, it's certainly with dairy and a few other industries. But if you look at our automotive industry, it's all GM, Ford, you know,
Well,
et cetera.
okay, but there is no longer an American-made car.
Well,
Part
that's
of the
true.
products for GM and Ford
Yeah.
come from Mexico. Some of them come from Canada.
Yep.
And there was going to be a real problem bringing in those products. But then they created this new, what I call NAFTA 2, and now that's no longer a problem with either companies. But there could have been if that new thing wasn't negotiated. So
Yeah.
yeah, there would have been a problem.
Um, Sorry, I was looking at the annual report. I was trying to figure out the market as what the Tom to address Tom's question. Because when I was in China, I noticed outside the Shanghai, the solar panel was very popular, and it was so efficient. Was in China they don't have individual house, but they have apartments. On the top roof apartments, the solar panel was shared by the entire uh, uh, individual, how to say, household. I was asking a friend, I said, how do they do it? It was interesting. I said, if it's a one house have one panel, it makes sense, but this panel is shared by multiple, what do you call that? Households?
Yeah.
Yeah, it was kind of interesting to me.
Yeah.
Well,
Um,
basically what they would do, I think, is just take the amount of electricity generated and, you know, if you know, work it out based on what each household is. They have a separate meter, so they would
Yeah.
know
oh, okay,
who's
separate
who's
meters.
using. Yeah,
My,
and then you just kind of split it somehow.
I see.
But that's the question I had was sort of related to that. Mina, is
Yeah.
you mentioned that they develop solar projects,
Yes.
and then they also develop and sell solar panels. So would you know how much of their sales come from solar projects versus selling solar panels? Because when you have a project that's a guaranteed sort of income stream for you sign a power purchase agreement for or whatever 15 years, so it's a guaranteed income stream, whereas if you're just selling the panels, that's a little bit more cyclical.
Right. I agree, and I don't have that number handy right
I was
now.
wondering if it's
But I think a lot of the projects, I understand that in Brazil that they've made inroads for significant ground mount projects, pardon me. But in terms of the overall numbers, no, I don't have that right now.
Okay.
Let me see if I can pull that up in the
I
report
tried
here.
yeah. I tried to find okay. Do you want to take a look at
I
the
think this is a
backside?
good.
What high P
This
did
I
you
think is a good.
Mina, what high P did you give?
Oh, the high PE I used was 13, which is just the historical 5-year high.
No. Oh, because we changed historical five. Historical five
Yeah, so you
was
seem to have two crossed.
11.9.
Well, there's two crossed out there that I don't
Oh,
think
okay.
yeah. So it came out to me when I saw the average was 13.2, so I picked 13 on that basis.
Wait a minute.
If you see the high PE there is 13.2.
Yeah, the
Yeah.
closing price is $18, and we're going to project that next 5 years will grow to 128, 10 times.
Yeah, I think it's a high growth industry. It's not, I don't think it's, this is not like, I don't think it's a company like Disney, or we shouldn't evaluate it the same way we evaluate Disney or we evaluate Comcast or we evaluate these giants. This is a company that's it's a small cap company that in an industry that's set to, hopefully, that's the idea at
Well,
least, to
why don't you finish the
expand.
numbers and then we can come back and discuss
Okay.
if they're
Yeah,
valid.
what's your low PE?
Low PE for some reason here now. I'm trying to take my mind back to how I've got this, but for some reason I have 2.3. I think it's because the
3?
average low was 5.7, and the low forecast I found was 3.6. So I went even lower just because pardon me, I don't know why. The low price that it gave me was $20.80, which is above the current price. So just didn't think that was feasible. So I lowered the low price and then also lowered the PE so that they would be consistent.
Yeah,
8.4?
see, here
Is
I
that
would
what you
rely
got?
more on the 52-week low.
Yeah, so because when I put in the PE value of 3.65, which was the BI estimate too, it gave me $21. So it did work. I used the lowest price point since 2017, which is $10.90. I used that for the low.
Okay. This one? Okay.
Yeah, I used 10.9. And so I had an upside down ratio of 9.0. I don't know why it's 15. I don't know
Oh,
what
because
the
your
difference
starting
there is.
point, what's your starting point? Is quarter or
I might have gone from 20, yeah, 13. So maybe 29. 2009 and 2010 should be crossed out as well, I believe.
2009 and 2010,
10,
you
yeah.
said?
Yeah,
Yeah.
so I
I
went
don't know if
2024,
that will
that's why.
change. That won't change the number though.
Oh, okay, well,
Only
I'm
the
not.
projection. Was that the same projection? Is that 12 and 22 was your projection? Another thing is the
Yeah,
starting
those are my
point.
projections, so I'm not sure how.
Yeah, try changing your starting point, see if that changes it.
What did you use?
It's not going to change the back.
It's not going to change the back.
Yeah, so
Only
Oh, it's not,
this number will change the.
Well, actually, it will if it gives you a higher 5-year average. Or what's that called?
Oh,
5-year
your earnings will change.
estimate.
Earnings
Yeah.
will change, but he did not use preferred procedure earnings anyway.
Oh, okay. Okay.
yeah.
Yeah.
So that's a good question. How come it's higher?
What numbers do you have?
Let me see the PDF. Yeah, it's a good question here. So I have sales. I think they might have been quarterly then, if I started off. I have
On 4A, what is your
for
PDF?
my high price on the PDF is 83.6.
What? Sorry, I missed it. Oh,
$83 and 60
I'm sorry.
cents.
Yeah, here.
Yeah.
So
Mina, what numbers
Oh
right
yeah, no,
there?
because the high PE
What
is
numbers do you have on your PDF?
I have 13, and for the high PE I have 6.43. So that there's a difference.
6.43.
0.43. So I went between the 5-year average. I went current.
See, that's two different things.
Two different things.
The
Yeah, now we'll
high
give 83.
EPS forecast is what you get on figure 1.
Mm-hmm.
Right. Right. I don't want to change the earning sheet per share
Well, go
because
back,
that
go
was wrong.
back and let's see what the graph shows. Because that may be a more realistic. That dropped it to 643 at a 12% growth rate. I think that makes more sense.
Yeah.
There, the earnings and sales are equal.
Uh-huh.
So
Right.
I think that makes more sense. Go ahead.
I
Now
agree.
let's go back
Okay.
to back
Okay.
page.
Okay.
Yes, that looks, now that is, I believe, I think we have the same. Yeah, we have the same everything. Now it's, yeah.
What if I cross out this? What's the average will be?
No, never
high.
cross it off to make it better. You cross it off to make it worse.
Oh, the high one. Sorry.
I mean, that one 4.6 is really off, but I've got my fingers slapped when I've tried to cut those off.
So if you, yeah, right. So if you cross out 2016, do you want to change this to 10?
Sure. Give it a shot. Because the reason I haven't crossed anything else, I think it was just so volatile that I said I'm not even sure which one's an outlier at this point. But yeah, you're right. I mean, between we have 10, 13, and 11.
It doesn't really make much difference.
No,
I
it
mean,
does not.
we're just playing around with numbers, but
Yeah.
Well, I dropped it from 9 to 6. That's a pretty good drop. That's Because
Yeah, but I mean,
anything
it's still
above 8
six.
is suspect. So
Sure, but 6 to 1 is still pretty good. So it's,
Mm.
I don't think it's,
Mhm.
well,
it,
and maybe I just was wishful thinking, but Mina convinced me that that's not with this particular industry. If it catches on, I know here in California, there's a lot of solar panels going in. The only problem with them is they only go out. They sell it to SMUD and PG&E, and then when PG&E cut the power for 3 days, those people couldn't use it because hadn't set it up for a dual
yeah, they're connected to the grid. They're not
to the
connected.
grid, not to their house. They needed to
Oh.
switch it, and no one knew how to do that.
Yeah.
But these are really popular, and at least out here in the West.
Mina, can I ask you a question? Is
Let's
this commercial or residential or what's
both.
their both?
Yeah.
It sounds like it's both, Joanne, because they have these projects. So
Yeah.
basically, they would go in some sort of big field and put a bunch of ground level solar panels, and then they
Okay.
would
So yeah.
supply
So
electricity.
for example, I have a client that is involved in some of those ground projects like Hanny was describing, and the upfront cost is really, I mean, they debt finance, they get their upfront costs from different investors in Canada. That would involve, Ontario Power Generation and different actors, and they project the revenue over 60 years, or
Okay.
20 to 40 years. So pardon me. So they seem to these projects, they're talking about front end investment, and then they have projections for, and the revenues are talking about 60 million in the next
Because
20
I've
years.
noticed I work at a university that's close to a DOJ, and they've got all their parking lots are putting up solar. And then the Kaiser I go
Yeah,
to, they're
Kaiser,
putting up,
they're all doing
yeah.
that. Yeah.
So it
Franchise tech
seems that,
board too. But
okay.
yeah,
So can we see the quarterly data?
Yeah, I
yes.
actually have the
But my
PDF.
question is, well, how do they make money? So if they already put out, right? And are they continuing making money
Um,
if
yes.
the organizations already have the solar panel installed? How do they
Oh,
make money?
there's so much growth. Almost
Yeah.
weekly I read about a big corporation who's putting solar panels on their roof, and
Yeah. Mhm.
like Joanne said, Kaiser is now doing it in every one of their parking lots. So there's a lot of
So
solar panels yet to buy.
That's right. I don't think the
so
market's
you buy it
saturated.
one time. So how do they make money continuously? Because I think they take a loan, right?
Well,
Actually,
so
I
I
have
think they're large enough at this point that they develop these projects. So I don't think that they have to debt finance the same way that smaller projects have to. They also sell they also sell the panels to projects, so they're not funding that on debt. That's revenue coming into the company. And in terms of well, first of all, also a lot of these panels will need replacement and updating, and so Canadian Solar seems to produce more efficient and better panels over the years. So I mean, if you bought a panel in 2014, 2023, you might be considering a new panel. I'm not sure, but the lifespan is long, but in terms of efficiency, if there's a huge jump, maybe there's replacement value, damaged panels, and then the market is just so large yet that I think we have many years before we have to talk about saturation, I think.
Yeah,
It's a
if
growing market worldwide. It's a growing market worldwide. And it's becoming very cost effective compared to fossil fuels to put in the solar panels.
and typically too, California is ahead of the curve when it comes, they have all these mandates for net zero energy, and even the building code, California sort of sets the precedent, and then the rest of the country follows. So if that's the route this is going, I can see why, we want to find something now.
I have another question for you, Mina. Did you look the competitors for this company?
I did, and actually, Roy and I spent a few minutes just going through some of the SSGs for them, and they just look. I don't think we could have justified them in terms of their volatility and their historical performance. So Canadian Solar seems to have the longest track record that I could find, of continued growth and publicly available data. So a lot of the other companies either had too short of a window to really assess them in accordance with the BI principles. Other companies just they really don't speak to fundamentally. Pardon me, they wouldn't have been consistent with fundamental assessment of companies or the way our approach to these companies. Also, this company just seems to have the highest margins and they seem to be an industry leader. So that's how I settled on them. So there are definitely a bunch of other competitors, especially Chinese companies are really taking the lead in terms of newer companies in that sense too. But Canadian
Yeah.
Solar seems to be the leader that I could find.
So what makes you think that this is the leader of the industry?
Well, between their highest margin, so their ability to post the highest profit margins is number one. I would also deal, well, not number one, pardon me. I would deal firstly with the fact that they do both projects and solar panels. So they have an expertise kind of throughout the entire process. I would say also that they've been consistently breaking the records in terms of efficiencies. They break their own records. So there's continual self-improvement in industry-leading behavior in terms of having the most efficient product on the market, having the highest profit margins, being involved in creating these projects themselves. So those bases, I think, separate them from your traditional, traditional in the relative sense, panel manufacturers.
Mina, you may have gone over this, but I just noticed the sales for first quarter of this year has
Yep.
dropped significantly, and of course,
yeah.
it's up second quarter. Do you know why?
Yeah, so it seems that analysts called it there was a market standstill. So 2018 had significant growth, and so it was explained as an industry-wide drop. So Canadian Solar dropped significantly, but so did competitors. So that's why I didn't think it was something that reflected the company's performance or the demand for their product specifically. Said that there was a lag in the demand because of the significant demand in 2018, and then they're expecting significant demand in 2020 and forward. So there's kind of just a lag. I'm not sure, maybe I don't understand that fully, but that's how I understood.
Mina, I wasn't, I didn't even think of this when we talked before. It just dawned on me with all this other discussion. 2018, they were raising interest rates here. I'm not sure about in Canada, but people, if they're exporting to the United States, with interest rates going up, it's not like going down and buying, a jacket or something.
Right.
It's a long-term investment, and so you have to borrow money for it as a consumer. But now, I noticed this second quarter a huge jump, and that's, I think, because there were two interest rate cuts this year so far. So I'm wondering if part of this could be interest rate related.
Yeah, that's definitely, that's a good point. I mean, if you have to finance it, absolutely, right? I mean, I think that's any industry that has financing. So
Because I think that's affected, the building industry, the housing, and also automobiles.
Automobiles, yeah. So I mean, I can imagine this is the same
I could
trend
see this being the same thing.
for sure.
But with solar panels, you can also do a power purchase agreement where you don't have to finance anything. You just start paying for the electricity you use. We did that recently in our house, and we didn't have to pay money up front. The power purchase agreement you can make with the panel company. We made it with Tesla.
Oh, great.
Yeah.
Right.
So can you drive your solar panel?
But they do. It has reduced our electric bill. Except the problem is they put it on a bad roof, and so they got to take the panels off and put a new roof. And oh, geez, this is a nightmare. But still, we got into solar electricity without having a down payment.
You were never a Boy Scout, were you?
Okay.
Prior planning
Yes,
pays.
I was.
Oh, you forgot it.
But I was a boy. Yeah, yeah. I had trouble as a Boy Scout because I would wet the bed till I was 14, so I couldn't go camping with the groups because I didn't. They would make fun of me if I wet my sleeping bag. Oh, but yeah, I was prepared.
Okay, any other questions about this company?
No.
Okay, should we move on to the,
Okay. I'm hoping if we buy, we can buy a lot. Okay,
Roy, did you,
fine. Go ahead.
Okay, let's see here. That's for you, Haney. That's where I'll be spending September. Okay, let's see here.
that's nice.
And to answer Jay's question that'll come up later, yes, I looked at all competitors. I did 60 stock studies and narrowed it down to 12, narrowed it down to 6, and then these 3 came out on top. And for the longest time, I couldn't decide which one I liked the best. And then last weekend, only Domino's Pizza was in a buy. The others had changed. But then today, I ran it again, and all 3 are a buy again. So we'll go from there. I'll show you the SSG first. Domino's had pretty good graph. The last months have been, or last few quarters were down a little. But this is a quality company. Of the 3, Morningstar did a full report on it, which I was able to get through the San Francisco library. But I'll bring up my first cut. So that I'm not sure what the present price is today. But how does it make money? You'd think it sells pizza. Really, what it does, it leases 98% of its locations to franchisees. There are very few company-owned locations. So they're mostly the franchise owners are taking the risk. They're having to pay Domino's. And Morningstar says Domino's Pizza is well positioned in the highly competitive global restaurant industry. To endure intense competition, the firm is poised to leverage the wide moat it derives. And I thought, wait a minute, restaurants don't have a moat. But it does, Morningstar does credit it with an economic wide moat. And it's because they're basically the 400-pound gorilla in the pizza industry. They're the largest, even though they're a mid-size company. They just what they do is they equip their stores for these high-intensity ovens. And to try it out, I got a pizza the other day. They said 15 minutes. Well, 6 minutes later, my pizza was ready, and I left the store. I've never found that in any other pizza place. So they're doing a lot of things and a lot of things right. Even though they're large, they have over 18%, which seems small, but I mean there are a lot of pizza companies out there, and 18 is larger than any of the others. And you can see since 2009, it's basically doubled the number of the market share, and the earnings have grown tremendously just in 3 years. And so there's been a few franchisees closed because Domino's monitors them very closely, and if they're not performing well or turning out a bad product, they yank it. So whatever they're selling seems to be going good. And I know that the general manager, I forget, or I mean the CEO, a few years ago, I want to say 5, but I could be off by a couple of years, said, we have really horrible tasting pizza and we're going to fix that. And so they made a big effort. And I thought that was a great admission because 10 years ago, I couldn't stand Domino's pizza. They've just worked really hard at doing it. So I can go through the first cut, but I think it might be more meaningful to just do the SSG. I chose the 9%, which is a little higher than the 2-year estimate, but I don't go by that figure very much. For Zacks had 8.25, Value Line figured 11.5. I just assumed 9 would be good. And then come on, let me refresh this. I used this time I did rely on the analyst estimate of the 15.5. I thought it made sense. I did not go through and tweak these judgments to see if they were valid. You can see free cash flow. I mean, is that it? Did I move the wrong one up? This is, come on. So pre-tax profit and the free cash flow match pretty well. And earnings actually grew a little faster, but that's probably because of they've been buying back stocks until recently. So that's one of the reasons I rely more on pre-tax profit. But you can see good growth rates in the past. The pre-tax profit on sales dipped a little, but it's been pretty much around 14, 13.5 average. So it's down a little, but not much. Return on equity is negative, even though they've got good free cash flow. So I do not understand that line for here. The worrisome part was this debt to capital, and that really threw me. But there's been a new accounting requirement starting in January, but they seem to have this high debt, and it could be that they're financing the buildings that they're then leasing to the franchisees and stocking it with the new ovens and that. The other thing is what's occurred in January is if a company leases something, they have to include it in debt. It used to be if they borrowed money to buy things, that was what your long-term debt was. Now they have to do it for anything they lease. And I'll notify you guys when that comes out, but I think it's in November. Better Investing is going to do a presentation on that subject, and I don't know if it's the which one of their webinars it's going to be, Stock Up or the other one. But I'll let you guys know. But we all should watch it because it should be eye-opening.
So Roy, you're doing a good job. I want to mention one thing I saw on the Jim Cramer show. They interviewed the CEO of Domino's, or Domino, and the issue came up about delivery. And
Oh,
Domino's,
yeah.
they want to do their own. They want to do their own delivery because if Grubhub or DoorDash or somebody else, then that adds about 20-30% on the price, which by doing their own delivery, they figure they can be more cost competitive.
Yeah, I forgot that.
But
I was gonna mention that, so thank you. Yeah, they've made it very clear that they're going to do their own deliveries because I think it's going to be more cost effective. And certainly in places, like, Northern California or California, people are too lazy to leave their homes to go get something, and they'll call um, these other services to bring them their food, especially if it's like during a football game or something like that. And so while I went in and got my pizza to go, they have it all set up ready to deliver, and they're making a big push for that. And that's where a lot of their money comes from, is from, selling pizzas through delivery. You don't have, they do have a couple tables there you can eat if, they're in the store, but it's not a very attractive thing. It's a order, grab it and go type of place. And anyway, that they're making a lot of money through their sales that way. Here's the section 3. The 40 wasn't that high, but I thought I'd knock it down a little bit. So that was the 35.8 average. Without that, it was a 36.6 average. So I dropped it down to a high PE of 30. And 517 is just about double the current price. And the low earnings per share is forecasted as $8.35, which is a big jump. The 5-year average is 24.5, which I tend to use, but I like whole numbers, so I rolled it down to 24. Give a high price of 200. The 52-week low price was 220, so I'm a little conservative there. And with that, it's a 4.71 to 1 ratio, which seems high to me, but that's what the numbers came out to, and a 14 and 16% return. So this is my recommendation. Can answer questions if you have any, or what I'd like to do is show you BJ's, which is where I was going originally until last weekend when Domino's got better. One thing I like about Domino's over the other two is Morningstar has a full report, stock analysis report on Domino's. It does the other two. They're too small for Morningstar to really pay that much of attention. But let's see here.
what are the other two? So Domino's and what was the other two, Roy? I'm sorry.
BJ's Restaurant and
Oh,
Texas,
BJ.
Texas
Oh yeah, it's your what you sent us.
Roadhouse.
I got it. Thank you. Yeah.
So,
Okay.
I don't want mail. Come on. So you can see
Oh,
the graph
the
isn't
thing,
quite as good, but the growth rate is historically 10%. The 2-year estimate's 5.5. The let's see, BJ's. The range was from 6 on, so I chose 6. And then I did use preferred procedure for the 10.9. And again, the pre-tax profit was kind of iffy, but and down a little this past year. Return on equities, good solid mid-teens. Debt is down. So, but they're building a few outlets every year and tend to be using their profit for that rather than borrowing. You can see free cash flow was gruesome in 2010 to 2013, but it has come up, substantially since then. Probably because I guess Sud sells. BJ's has quite a bar. I don't like any of the beers they sell. I don't like their pizza, but my wife and daughter do, and a host of other people because I always see it crowded. Um, and I wish Matt was here because he could straighten me out where I'm wrong. But what
a
company
nice
he
thing about
he liked,
BJ,
I didn't. So, and here's another one.
one thing nice about
What?
BJ's got a peg ratio of 1.4, the lowest peg ratio,
Okay.
compared to Domino's, a 2.5 peg ratio.
Yeah, it's gone up quite a bit. So
Okay. Now I think we're getting short on time here.
yeah. So anyway, here's I used what I think were conservative numbers, knocking out that 2014 year had a high of 28, and I used 25. I used the 5-year low. Let me manually update that. So that can't be right. So the upside down ratio seems odd to me. It was in about a 4 something. But so this would be the other one to consider. I didn't do a full report on it because, like I said, last weekend it didn't have a buy price. So anyway, that's Domino's and BJ's.
Okay, thank you.
Who wants the screen now?
I do. Sorry, Roy. Oh, well, I don't have a question about this Domino's, finished Domino's thing. I want to talk about the solar. I did a little bit of research.
Okay, you've got it.
Okay. So you guys can talk about Domino's first, so then I want to.
Well, are there any other questions about Domino's? Okay.
I hope their pizza is good because they used to be terrible.
Oh yeah, I
I
have
agree
enough.
with you. It wasn't bad. I still prefer Roma's, but that's full
Not a
service.
chain.
Yeah, we saw
Yeah,
their
it
deliver.
literally is a mom and pop and a
Yeah,
cousin and an aunt.
we saw the deliver car, and Celine, my daughter, always asks, "Are you paying Domino's?" Not because they on the top of the car has Domino's their the label on the
Their
on top of
brand.
the
Interesting.
brand. Yeah, she was asking if not paying money, just pay Domino.
They'll pay with Domino's.
Oh yeah, I never had their pizza before. Anyway, I was looking for a Canadian solar company. I just want to try to understand the market. But what I found something else about their board members, and they are Chinese dominant. It makes me feel like this is a Chinese company. I found it very suspicious. So where was it? Oh, sorry. I was first I was looking at the affiliates, you know, what they are. They have different at different places, ownership of it doesn't really make sense to me. 49. I was think it was 100%. I don't know how this will work, but I was just looking at ownership because I was trying to understand, you know, how much in China, how much Brazil, you know, as Tom was asking, or Tom or Henny, whoever asked that question. And then I went on their
Go
website.
back to that.
Oh, okay.
The 49. It's not that this company owns 49% of the solar. Solar owns 49% of this company. And
Oh,
as
okay.
I
That's
understand it,
2017. Okay.
you can't own more than 49% of
49%.
a
Okay.
Chinese company.
Okay. So now, so 2017 doesn't add up, but 2018 it adds up, right?
Oh, for 100?
Just about, yeah, adds up as
Okay.
200.
Hmm.
No, I don't think that's what he was saying, right? Well, what you're saying is this is what they
I don't
own
know what you're
of these
saying,
companies.
Jay.
Yeah,
Oh, I was
Jay,
saying that the right
it's
corner.
not supposed to add up to 100%.
Yeah,
Not
Yeah,
supposed.
yeah.
and it
Yeah.
doesn't.
It just means
Yeah,
what.
these are each individually. They're telling you what they own. These are, they've made investments in these, what they call affiliates.
Okay. Okay. Affiliate. Okay.
So why do you
And then,
say Chinese company? Why do you say Chinese?
so because I went on their website,
The officers.
the governance or the board of directors,
Uh-huh.
and the CEO's Chinese, and only those two guys are Caucasian. Rest of all Chinese. And I was like, that make me feel like, is this a Chinese owned company? So, and I went on to, I was digging more about their presentations, and I just, you know, try to understand their market, you know, how they scattered, how, you know, Brazil versus Mexico or China, how, you know, what's their market share percentage. And I found this slide again, you know, senior management. Only two Caucasian as a man listed on their website. Remaining of them all Chinese.
Just because they're Chinese doesn't mean they're Chinese. Do you know what I'm saying? A Chinese company.
No, I mean, yeah, I mean heavily towards
I know
Chinese in
Chinese people
management.
who are now American citizens.
No, I know they probably are. But what I'm saying, just very suspicious.
Well, look at
You know,
this
to me.
guy's education is from Canada. This guy's
Yeah.
from Hawaii. I
Oh
mean,
yeah, for sure. They got a Western education. I don't have any doubts with that. So they probably got high education. What I'm saying is, you know how back then, Roy, when we're looking at the 10K annual report, we're always looking at the diversity.
Hmm.
I don't see this company's diversified in terms of, you know, nationality, or shouldn't say
Okay,
national.
these
I
are
don't know.
directors. What about the officers?
That's it. That's what officers. I don't know. That's all they
No, it's
said.
directors. It's
That's
board
it.
of directors.
Board directors, and
or,
then that's just their governance. And then
oh,
if you look at this, CEO,
CFO.
CFO Chinese, COO Chinese,
Okay,
CVP.
one guy is from Australia.
Yeah, I'm just saying heavily dominant as
Well,
Chinese.
they could have
Does
all
it,
immigrated to Canada, or it could be like a front or something, you know, it could be like some sort of fraud.
does it
Smoke and
say,
mirrors.
does it, when you were looking at the annual report, did it say what the ownership was? Who owned the most shares?
Uh, no. Which picture would that have that information?
112 to item
Major
7.
share. Major shareholders.
This
I
one?
just haven't.
If you click on the page on that 112, will it take you there?
Doesn't have percentages.
Well, but you know,
Scroll down.
20,000
Scroll
shares
down.
doesn't seem like a lot.
Go down a little bit where it
Scroll
says
down.
major shareholders at the bottom of the
Oh,
page.
yeah. Uh-huh.
Please refer to item 6, directors,
Six.
senior.
That's
Item
above.
6. Okay, let's look at item 6.
Right.
They didn't say the ownership. I don't know.
Go down just a little bit.
Keep
Scroll
going.
down.
Keep.
Oh, that's their bios.
Keep going.
So what's the issue if they are Chinese or not Chinese?
I'm just saying they're heavily, Chinese dominant in their management team. So another thing that I was looking at the audit was, where's the audit letter?
I think
So it
the
was the
issue
letter was what?
the issue
Go
is
ahead.
that Jay's a Trump supporter, Megumi.
No comments.
Uh,
I did not know. So where was the audit that I saw was the letter was issued in Shanghai.
16A, 16A.
Okay. The letter was issued in the audit letter was issued in Shanghai. I was like, what? Why is it in Shanghai? It was kind of weird to me. And now I cannot find it. Did I wrote down? Oh, no, I did not. I did not. I don't know where it is. No, to me, I just feel suspicious. That's all.
Haney, where is Guelph? Guel,
Guelph, Ontario.
Ontario.
It's
So that's where they're headquartered.
that's about 20 minutes, half an hour down the road from
Okay,
where
hop
we
on
live.
over and check them out. See if it's an
Okay.
empty office.
So actually, it's interesting. In Guelph, Ontario, there are near Guelph, Ontario, there are 3 universities that have, Waterloo University has the best engineering program. I think Handy could speak to that, I guess. But there's 3 universities there, and they're using the Kitchener-Waterloo area, so that's a town about 15 minutes away from Guelph. They're trying to characterize that as like the Silicon Valley of Canada. A lot of tech startups, a lot of that's where a lot of them start up. There's like an innovation center with the University of Waterloo. So there's a big focus on tech in that community.
Guelph is also one of the safest communities in Canada because there's a lot of mafia people living there.
Which mafia? But this Hua, or however you pronounce his name, the president's chief executive officer. Prior to this, he was with Ontario Hydro, currently Ontario Power Generation. So he seems like he's been here a few decades.
And
maybe these guys can tap into the market. The Chinese market for solar is pretty big too.
And also, they're all from mainland China. I know it because they're how they spell their names.
So they're not Taiwanese, huh?
No, not Taiwanese, not Hong Kongese, just by the spelling.
Really?
Yep.
Wow. So you have I don't really have concerns that they're Chinese. Do you have is it just
no, I don't have a
diverse
concerns they're Chinese. I'm just saying they're not diversified enough.
Is that a requirement for us to buy this stock?
Don't we have Chinese people in this club?
I'm just saying I have a concern. My concern may not be your concern. That's fine. But I'm just, for me.
Jay, don't we have Chinese members of this club?
Yeah, but I'm diverse. I'm just one of Chinese, so B and I.
Well, so you feel like there's not enough diversity?
Yes.
I never looked at the board.
I think, to be serious though, I think what what Jay's saying is it's potentially a
Scam.
Chinese company that set up shop in Canada for whatever reason.
For
But
like
I don't.
fishy reasons, like
No,
illegal.
So
reasons?
Jane, let
no,
Jane
no,
to
no,
speak. Jane, what's
no,
your
no.
intake on this? As
I,
you
I
when
think
you see the management heavily dominated by Chinese, mainland China, Chinese.
I think Jay, you're concerned about the possibility of being a fraud, a scam. They set up a listed company in the US. They don't have any substance. So I think the question to ask is whether they really have substance. Do they have assets in Canada or China or anywhere else? Right?
The company history is this was founded in 2001 in Canada by Dr. Sean Koo. So it's, you know, unless they're sleeper agents, they came over and been living in Canada for, of course, but being Canadian is a little suspect to some of us, but, you know, I would call them
Oh, I'm sure they are
Canadian
very,
Chinese.
yeah. I'm sure
Right.
they are very well
Well, this
qualified. I'm just saying this company, to me, is like a Chinese company located in Canada.
Okay,
You
so
know,
I think in previous meetings we had talked about purchasing shares of stock. I can't remember what it was, but we decided not to because it
10,
was a
10
Chinese
cent,
company,
10
right?
cent.
10
But
cent.
Yeah.
Oh yeah, yeah,
that
yeah.
was,
So is that different than this?
Oh,
And
Yes.
Roy,
I
absolutely.
mean,
I was eating when you made that comment. That's why I didn't respond.
that's quite, that's just fine. Thank you. Um, Joanne, yes, to me, there's a big difference. From articles I've read for, a good 10 years or so, when I did own some Chinese companies, there was a law, and Jane, correct me if they've changed it, but there was a Chinese law that you could not challenge. It was unlawful to challenge um, the audit of a company. And this was when, and this was an article out of Hong Kong when it was a, I won't say a free nation, but it was it, pretty independent. So I stopped owning it, and in fact, the pork company I owned, crashed and burned a few months later when they found out it was fraud. Um, and it wasn't uncovered because you couldn't challenge. This is a Canadian company. They're reporting to Canadian, their version of the SEC. So to me, it's qualitatively different.
Right. Plus, you also do have, given that's a Canadian company, you have all the rights and obligation afforded to shareholders, right? So there is oppression remedies. The directors have to account, have a fiduciary duty, right? So in terms of the setup, you're right. It's a Canadian entity, so it's applicable Canadian law the way we would treat any other company.
Yeah. And maybe, I mean, I don't know these guys' histories, but maybe they came over and migrated because of the situation. They saw an opportunity, but also, for an, an industry that maybe at that time wasn't going well in China, or they felt more freedom in Canada that they could do things their way.
Well,
I
you
don't know
mentioned
like I said, I don't know their history, but this company's been around, was founded in 2001 in Canada. So to me, there's a big qualitative difference.
the CEO Roy, and there's a number of sort of entrepreneurs at Ontario Hydro, which is a provincial crown. So there's a lot of sort of red tape and government type of operations, but a lot of the more entrepreneurial people have left and started their own companies. There's a few of them were Chinese, so I know some of them personally, um, and they've been around for ages. So I don't have a huge problem with that, I
Yeah.
guess.
If this was truly a shell company, then I would have a big problem. But I think it's sufficiently grounded to satisfy my concerns.
we ought to vote.
Yep.
Well, somebody has to pitch to
Okay, I
make a
move
motion.
that we buy. I move that we buy BJ's pizza.
BJ's.
BJ's Pizza?
No,
BJ's or
Domino's.
Domino?
Domino's.
Domino's.
You saying,
BJ's not
are you
presented.
saying BJ's or Domino's?
PJ's. I move we buy PJ's because the peg ratio is 1.4 instead of
BJ's or
2.5.
But BJ's not even
Yeah,
presented.
and it's small,
Well, I
so
put
the
it
buys
in
all.
the SSG.
do we have a second?
Nope.
I guess motion dies for lack of a
I'll,
second.
I'll, I'll, I'll second it.
Okay, how are we voting? Are we voting
Well,
with
that's a good question.
my iClub?
I don't have this set up yet. Just if you'll bear with me a moment.
Do we need to discuss once the motion has been seconded? Is this when we discuss?
Sure.
Okay.
Yeah.
Can you explain to me why you want to base it on the peg ratio, Bernard? Your motion?
Well, okay, the peg ratio, what it shows is that the rate of growth, the PE, okay, what the peg ratio compares the PE to the growth rate. And when with Domino's Pizza, the PE that we'd be paying is 2.5 times the growth rate. Where with BJ's, we'd only pay 1.4 times the growth rate. We're getting more earnings and more growth for this for less money. That's what I feel, and it's also it's got a higher dividend and a lower payout ratio and a smaller company. So I like it.
Yeah, it
Okay.
was almost it's followed by the small cap informer and was a small size company until recently. It just barely inched into the mid size. So anyway, you should all
Yeah.
have the email on
Yeah,
voting.
I got it.
So what's the motion? Is it for BJ's or Domino's?
Yeah, BJ's.
BJ's.
What?
Okay,
BJ,
how are we voting? Are we using my
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 iClub?
iClub.
iClub, you should have,
Okay.
Wait, was
and
BJ
everybody should
I'll
presented?
see
know
if I
how.
can
I
do.
sent a couple of
No.
attempts during the last month, so
I
you
got
guys can
confused.
practice.
Well,
I overheard. Yeah.
Jay, Roy presented BJ's as it comparison to
Yeah, comparison, but
Domino's.
not the not the full BJ's profile, just at the high level comparison.
So I don't think. Well, you said the email for iClub.
Just type in myiclub.com
Yeah.
and then log in. Hear we
Someone
saying?
have a
uh,
someone has got a radio in the background.
That might be me with the
Nina.
election. Sorry about that. Yeah, I'll pause. I'll pause.
Great.
Okay, so some have voted,
I'm
so
voting.
let me, I'll vote now.
Tom left a message. He's logging off. He vote yes on Domino's and no on all others.
Yeah. Oh, come on. Got a server error. What does that mean?
I'm
Five
not good.
members have voted.
I can't log on either.
Okay,
Why don't
so
I
you
can't
guys?
hear it. I can't.
okay, so Roy, what do you
Yeah.
vote?
I'm voting yes.
Okay, and Tom's voting no. Matt's not here.
So
Bernard,
I'm,
what are you voting?
Yes.
I'm voting
Of
yes.
course, he vote yes.
Oh
Yeah.
yeah.
so, okay, come on.
And Mina,
Yeah, I'll vote yes.
Domino.
six.
Okay.
Megumi,
Um, sure. Are we gonna?
Okay, that's
Okay.
okay. That's it. I mean, that's seven. Seven
How
Yeah.
out
many
of.
yes? How many no?
Well, okay. On this thing, we still have Andrew and
No, Andrew's not.
I know. Okay. And
What do you,
I
what,
think
what do you, what do
the
you think,
only
seven? What do you
John
think, seven?
Catterson and John Dennis.
yeah. What about those two? So I have seven. John, is this?
I voted.
Yes.
Yeah, I voted too on the system on the My iClub.
Okay, there we
Who is
go.
this? Who's talking, John? What about John Dennis?
I voted on my iClub.
Oh, you didn't show up. Let me
It
see.
shows up for me. I can see it voted.
John
Oh,
Dennis
you can see
voted.
it. Oh, he did. Okay.
Yeah.
I think it passed though, so.
Oh,
Now it doesn't show that I voted, but I did.
Okay,
So
but
1, 2,
but
3,
just
4,
for
5, 6, 7. Did everyone who voted vote yes?
No, I voted no.
I vote no.
I voted yes.
I
I
voted no.
no, oh, I can't, oh,
It just has voted and has not voted is what's up there.
that's right. It doesn't show what you voted. Oh,
That's
Yeah.
forget.
how it's done.
Okay,
What's
Something I
the
don't
what's
like.
What's the
last?
result?
I can't tell who can see the results?
No,
I
no one
can't.
yet.
Oh, no,
Okay.
I can't
I can't.
Okay,
see
can we
anything.
stop for a second, guys? So Roy, I can see it.
So,
Roy has voted. Has not. Sorry. Jay has voted. Joanne has voted. Tom has
Yeah, we
not.
can see that. We need to know who voted what though, or we should just
Tom voted no.
tell you what, I
Who
can
knows
do
the
it
results?
a
How do we
different
know the
way.
results?
I thought we were voting by
I
word
did.
just today since
I
we all
did
got
not
logged
vote.
on.
I did not vote
Okay.
online because I gave my vote in person, and I don't
Yeah.
want to throw in
Yeah.
my vote and confuse the online vote.
Yeah,
How,
same here. I think we're doing it verbally this time, no?
Yeah.
wait,
Okay.
how did you guys in the past? How did you
Okay.
guys do?
We're
pass
logged
Sorry.
on, but
information?
it's not letting us
Hello.
log in at the moment.
Hello. Sorry. Stop, please. So I'll just go through the names and just let me know if you're voting yes or no. Okay. I think that's the easiest way. So Roy, yes.
Yes. Yes.
Jay,
No.
no. This is for BJ's. And
Yes.
Joanne,
Yes.
yes. Tom, no.
No.
And Matt is not here. And Jane,
No.
no. And Hanny, yes. And Bernard, yes.
Yes.
And Mina,
Yes.
Mina,
Yes.
yes. And Megumi,
Yes.
John Catterson,
No.
no. John Dennis,
Yes.
yes. So there's
7.
1, 2, 3, 4, 5, 6, 7. 7 yes and 1, 2, 3, 4 no's. Okay, so
Now,
it passes.
I have a follow-up, and I mean, there can be another motion or two coming up, but you want to buy $1,000 worth, or do you want to burn some money?
Hey, what?
We need to bet more money. We got a lot of money. Let's spend it. Let's
Don't
invest
we
it.
have like $10,000?
Yeah.
Well, but guys,
Vote was for 1,000.
yeah, I mean, I don't know if it,
2 or 3,000.
Just a second.
No,
Just a second. I have a
then-
question. Penny, how many
yes.
yes? How many no?
7 yes, and then 1, 2, 3, 4 no's.
Okay, so 5, including Tom, because
2,
Tom voted no. Okay.
No, that you
No.
counted that.
Motion
No,
passed. Motion passed.
7 to
no,
4.
7 to 4, including
Okay.
Tom.
Okay.
Matt is the only,
So
Matt and
wasn't didn't the motion include the dollar amount?
No.
No.
Okay. We should have,
But what we could do is just do the typical 1,000. Next month, you're going to have
Okay.
a ton of reports. From that, maybe you can find more companies to purchase more, more stocks in, increase the holding.
okay.
Yeah, I agree. I agree.
Okay, are there any other motions?
Yes, I move
I
that
move
we buy
for,
Canadian solar.
yeah, and I'll second.
I move that we buy
Canadian solar.
Canadian solar.
Okay, so how much? 1,000?
Yeah.
Okay, motion
More than
is,
1,000.
okay.
I can
So,
try it again. I'm going to do a new one. So can solar, question mark. Okay, why isn't this?
do you want me to do it, Roy?
Yeah, this thing is, I don't know what's going on.
3,000.
Oh, I was trying to type on your side.
Who's making the motion? Tom? Or sorry,
No,
Roy?
Bernard,
And what's the dollar amount?
1,000. And seconded
I
by
didn't
Roy.
specify dollar.
Sorry? Say that again,
Okay, go
Bernard.
ahead. He didn't
I
specify a
didn't
dollar
specify
amount.
dollar amount,
Okay,
but
Bernard, can you
area,
specify a dollar amount
2 or 3,000,
on your?
3,000,
Yeah.
2,000, 3,000.
Pick one.
Oh, okay, 3,000.
Okay, so buy Canadian Solar 3,000.
I second it.
Okay.
One person per vote, simple majority.
Yeah, that's fine. Go
Okay.
ahead and leave it.
So,
What size company is this?
Small.
Mid. Oh,
Oh.
small. Yeah, small.
Oh,
Yeah,
small.
small.
Okay, good.
Yeah.
Okay.
okay, the email just went out.
Are we
We
voting
just
by
have to.
email now?
No, you just have to
You click
Okay.
on
your voting button, right?
and click on My iClub.
Yeah. Just hit your voting. But if you're already logged into My iClub, just hit your voting.
Okay, voting.
Hey, can I ask a
Voting,
question
but don't.
about?
Roy has not. Jay has. Joanne has.
No, I have
Tom's
not.
not here, Matt.
You
That's what
looked the
it
wrong person.
says.
I'm still
Jay,
looking at the solar. What is a solar module versus a solar project? What is
oh,
solar?
so a solar module is the actual panel.
Oh, okay.
A solar project is they would build a solar farm and sell the electricity to the government or whoever is buying it, the utility. So they would build a large solar farm, and then they enter into a contract to sell electricity, say for 10 years or 15 years. So it's a guaranteed revenue stream as long as they're producing electricity at the rate that they said they would.
We have about 98% solar power project.
So that's
They
good
have
because it's a guaranteed income stream. You don't like when they do the contracts, they're for a long period of time.
they have about 80% of the solar modules and other solar power products. So I
Oh,
don't
wait a minute.
understand this. I just cannot add 100%. I don't know. I'll still study this company.
Okay.
Okay, what do I need to do right now?
Did you vote?
For
That's right.
Can't vote anymore.
okay, voted.
Okay. John Dennis has voted and Roy has voted.
I voted.
I voted.
For some reason, I'm having some trouble, but I'll vote yes.
Okay, I'll just do it again verbally. So Roy, yes or no?
Yes.
Yes. Jay, yes
No.
or no? No. Joanne,
Yes.
yes. Tom's not here. He said no. Jane,
Yes.
yes. Hanny, yes. Bernard, yes.
Yes.
He
Yes.
made the motion.
He
Yeah.
made the motion. Megumi,
Yes.
Mina,
Yes.
yes. John Catterson,
Yes.
yes. John Dennis,
Yes.
yes. So only 2 noes, Jay and Tom. So the motion carries by $3,000 Canadian Solar. Any other motions?
Well, Tom said he would vote yes on Domino's, so I'm going to make a motion to buy Domino's.
Okay, Domino's.
For how much? Yeah.
1,000.
Yeah, 1,000.
Okay. All right. Roy, yes. And Jay,
Wait,
Domino's.
was there a second?
Oh, yes. Sorry. I'll second.
Okay.
Jay, yes or no? Domino's.
Yes.
1,000. Yes. Joanne,
Yes.
yes. Tom, yes. Jane,
She logged off.
okay. Bernard, Domino's for 1,000?
No,
No.
no.
Mina,
Yes.
We already got a pizza.
yes. Megumi,
No,
no. John Catterson,
Yes.
yes. John Dennis,
Yes.
yes. Okay, so that's 1, 2, 3. I think we passed 4, 5, 6, 7, 8. Okay, any other motions? So Roy, that's just to recap then, 1,000 shares of BJ's
Mm-hmm.
and 3,000 shares of Canadian Solar and 1,000 shares of Domino's.
Yep.
Quick question.
Yes,
Is this meeting designed to be 2 hours, or do we allow it to go over as long as we want?
We
Yeah.
really want to keep it to 2 hours because we have Canadian friends
Yeah.
who need to go to bed.
I would appreciate us
Yeah.
starting and stopping in a timely manner as well.
Yeah.
Okay.
Motion seconded.
well, I think, yeah, so we need to really, I think, watch, you know, two things. One is we should be getting all of the reports at least, 3-4 days in advance so that we can read them and do our own research so that we can make intelligent comments. We got a lot of reports late this time. And then two, really just be very judicious in the way that we ask questions and make comments. Only, ask questions when you have something really urgent that you want to ask about.
And I volunteer to be a timekeeper.
Yes, you're very good at that.
Okay.
I second that motion. But
Okay.
yeah, we really need to work on our timing for sure. But I
Yeah.
think a lot of it, seriously, a lot of it has to, is the preparation ahead of time. So we can't sort of be looking at this stuff in the meeting. We have to.
Yeah.
We have to look at it in advance.
I agree. Do you want to go ahead and ask, talk to our
Yes.
attendees, and then we can dismiss them and maybe talk about
Sure.
a couple other matters?
So you can
So-
stop the recording. You can adjourn the meeting.
Okay. How do I do that?
I'll stop the recording.
I want to continue. I want to be in the conversation.
Yeah.
Okay,
just stay on.
Okay.